Hey everybody, Courtney Smith here with our Wall Street winners for February 18th, 2019. Unbelievable. Market's doing very, very well. Loving every second of it. Loving every minute of this. I read it over and over and over again, usually before I go to sleep. All right. S&P breaks to new highs. Purple predictor, you can see, is stronger than the price action, showing that the smart money is buying this rally. And not only are they buying the rally, they're buying more of this rally. Now, if you look back in October, November, there's a lot of highs back there, and we're just getting up to those. So I would anticipate that the early part of this coming week, we'll see a little bit of weakness, and then we'll start to challenge those highs again. But it'll probably take a week to 2 weeks to break through those highs and head up towards the all-time highs that we made in September. Now, look at this. This is interesting. Here, the buying pressure on the Dow has moved to a multi-month high. That little green line is now as high as the buying pressure was at the peak of the market back in September. Now, the selling pressure, the red line, is still about the same, and the ADX is confirming it's a bull market. But there's a lot of buying pressure in this marketplace. The NASDAQ, oh my God, look at that purple predictor. That thing is skyrocketing. Look at that thing. Woo, woo, woo. What can I say? So I think we're still in this mode where the NASDAQ is going to outperform the other big indexes. Now, seasonality. I'm still ranking it as neutral, but it's been rallying. Our indicator has been rallying a lot, but we really need to get above some significant highs, and I've drawn this line at 158 for a long time, and I think if we break through that, I'm going to shift our indicator back to bullish. And remember, we're in a bullish period. We're supposed to be in a bullish period of the market, which ends in May, although this year it'll end in July. So if we can get a break through that 158 level in the next couple of weeks, let's say, we've got months and months of clear sailing ahead of us. Now, as you know, I wrote a report called Financial Crisis 2019. So I think we've got some serious problems late in this year, early next year, but at least the next several months should be really, really good. Get everybody very confident, lull everybody to sleep, and then smack them down in the fourth quarter. And here's why. The yield curve continues to drift back to the lows we made at the beginning of the year. At these levels, you know, there's no bright white line that says, okay, at this level, we're going to have a recession and a bear market. But I got to tell you, look, if it went to 0, I would say that's a bright white line. But 15 is, I mean, if it's not bright white, it's dirty white. Let's put it that way. Asset allocation remains bullish. We're moving money into the stock market out of the bond market. That's where we're getting some of this support. Now, remember, it's indicators like this, unique indicators like this, is why you subscribe, why you watch the freebie, for heaven's sakes, is to get a perspective on what's really going on, not the blah, blah on the TV or the newsletters. No, you want to get what's really going on. What's really going on is bond investors are getting out of bonds and into stocks. Our Riskicator, though, is not doing that great. When our fully paid up members, we get into our sector analysis, you'll see that there's still a lot of demand for those safe haven sectors. Global shares, they popped up here as well. They're looking pretty good, but I guess I'm still thinking the U.S. is the leader to the upside. Bonds grind higher. Now, this is actually good and bad, but the bad news is, with bonds moving higher, that means long-term interest rates are declining. If long-term interest rates are declining, then that means the yield curve is getting flatter, which is bearish for the stock market. But lower interest rates can be bullish for the stock market too, but not when the yield curve is so flat. Now, the purple predictor suggests we're not going to get much more rally here. Frankly, I hope we don't. Bond key factors, the blue line's the key here. It's still plunge-o-rama. So we have to look for lower interest rates on the long end of the yield curve. The dollar has been quite strong here, mainly against the euro, not the yen, but against the euro. But I still don't want to trade it because of all that resistance above there. I'm still looking at this as if it's in really a gigantic trading range. Gold, however, as you know, we're feeling very good about gold right now. Very bullish on this. The big breakout that we had back in November, grinding higher, big breakout in January. I think we're now starting a new leg higher in the gold market. Gold indicators, these indicators, the top one mildly bearish, the middle one turning bullish, the bottom one definitely bearish. But fully paid up members, you know our tips indicator, and our tips indicator is wildly bullish on the gold market. Freebies, you ought to subscribe so you can see these cool indicators that the fully paid up members get. Oil, pop. We broke out finally, gigantic head and shoulders bottom. I've been talking about the supply constraints, how we're actually shrinking the supply going forward, and that's exactly what's happening here. So look for this. As I say, I'm calling for a big bull market here. I'm talking about $70 a barrel. So that would be $18 rally. That's a lot. Bitcoin, I don't care about. Boring. All right, you've heard me say this. You make sure you get it. You've heard me say this. I don't want to nag you, but you really should be looking at this too. All right, freebies. Love having you here. Fully paid up members, just hang on for just 1 segundo, por favor.